An electronic funds transfer, EFT, is a type of financial transaction that involves the exchange of money between two or more parties through electronic means such as mobile or internet banking or by visiting a bank and sending a SWIFT message. To initiate an EFT, the sender must provide the necessary banking information related to recipient. The sender bank authenticate the request and debit sender's account. In international transfers, the intermediary or correspondent bank receives the payment instruction and verifies the details of the recipient's account. The correspondent bank may also perform due diligence checks to ensure compliance with anti-money laundering and counter-terrorism financing regulations. The respondent bank receives the funds from the correspondent bank and credits the recipient's account. The recipient can then access the funds. The correspondent bank sends a confirmation message to the initiating bank, indicating that the funds transfer has been completed. The initiating bank then notifies the customer that the transfer has been processed. Now, let's look at money laundering risks in electronic funds transfers. One risk is layering, where criminals try to make their illicit funds appear legitimate by moving them through a complex web of transactions. This involves multiple transfers between accounts to obscure the source of funds. Let's look at red flags and prevention. High-value transfers to and from different accounts, particularly those in countries with weak anti-money laundering controls. This can be mitigated by implementing real-time transaction monitoring systems, setting thresholds of frequency and value and review those exceeding limits. Perform enhanced due diligence on transactions involving high-risk jurisdictions. Structured transactions to avoid detection. For example, if someone sends multiple transfers of $9,000 instead of a single transfer of $50,000, this could be a red flag. Monitor for patterns of structured transactions using softwares. Educate staff to recognize such patterns and report suspicious transactions. Transfers to and from countries known for high levels of corruption or financial crime, especially if the transaction appears to have no legitimate business purpose. Maintain a list of high-risk jurisdictions and monitor transactions to or from these areas. Implement enhanced due diligence for transactions involving high-risk jurisdictions. Third-party involvement. If there are multiple parties involved in a transaction, such as a payment made through an intermediary or a transfer made on behalf of another person or company, this could be a red flag. Verify the legitimacy of all parties involved in a transaction. Implement KYC and AML process to identify and verify the parties' identities.